The global economic battleground is changing, and the stakes have never been higher. In the early months of 2024, the world witnessed an economic landscape reminiscent of a high-stakes chess game, where every move resonated in global markets. The MSCI China Index, a barometer of Chinese stocks, surged an astonishing 28%, signaling that investors are backing the Middle Kingdom. In stark contrast, the Nasdaq Composite Index, a cornerstone of American tech stocks, fell by 10.8%, reflecting growing investor concerns about the future of the U.S. economy. The comparison of these two indices symbolized a broader shift in global economic dynamics, increasingly favoring China and raising questions about the sustainability of American dominance. When the dust settled after the tumultuous years of trade wars and tariffs, it became clear that China's foreign direct investment, FDI, was also rising, increasing by 8.4% despite ongoing tensions with the United States. This was not just a statistic. It was a clear indication that global investors were reassessing their strategies, seeking opportunities in a rapidly changing landscape. The question remained open. Who is actually winning in this economic competition? China with its aggressive policies and ambitious growth strategies, or the United States, facing the consequences of its own decisions? When Donald Trump took office as president in 2025, there was a clear sense of optimism among certain segments of the American population. The promise of a strong economic revival was on everyone's lips, but the reality turned out to be far from expectations. The S&P 500 index fell by 6.3%, the Dow Jones index decreased by 4.4%, and Nasdaq continued its decline. The stark contrast between American indices and the remarkable growth of China painted a picture of two diverging paths. Investors began to shift their confidence, and the narrative that had long placed the U.S. at the center of global economic power was now being rewritten. China's proactive measures played a significant role in this change of narrative. The government implemented extensive incentives aimed at key sectors such as infrastructure and technology. These initiatives were designed to strengthen the economy and attract foreign investment, making China an increasingly attractive place for global corporations. Companies like AstraZeneca, recognizing the potential of the Chinese market, expanded their operations, drawn by the promise of a growing consumer base and supportive government policies. China's appeal lay not only in its size, but also in its strategic focus on innovation. Artificial intelligence and electric vehicles have become two pillars of China's ambitious growth strategy. Companies like DeepSeek AI have been at the forefront of technological advancements, pushing the boundaries of what is possible in AI research and application. Meanwhile, BYD, a leading electric vehicle manufacturer, has rapidly expanded its market presence, capturing both domestic and international markets. These innovations were not just products. They were symbols of a nation determined to take the lead in the next wave of technological revolution. In contrast, the United States faced the consequences of the trade war that began in 2018. Tariffs and retaliatory measures led to a sharp rise in consumer prices, a decline in consumer confidence, and a palpable sense of uncertainty. Once a strong economy, it now showed signs of strain, and the optimism associated with Trump's presidency began to fade as reality became apparent. Financial experts expressed concern about the long-term impact of these policies, suggesting that the U.S. was losing its competitive advantages in a rapidly changing global landscape. Beijing's strategy to reduce dependence on the U.S. and strengthen domestic consumption was a well-thought-out move. By focusing on internal markets, China aimed to create a self-sufficient economy capable of withstanding external shocks. This shift not only changed China's positioning as a developing center of innovation, but also sent ripples through the global supply chain. As Chinese companies began to innovate and produce high-quality goods, the narrative of American superiority in manufacturing and technology came under scrutiny. The perspectives from the White House and financial experts regarding the state of the U.S. economy sharply differed. While the administration painted an optimistic picture of recovery and growth, analysts pointed to underlying issues that were being ignored. The gap between political rhetoric and economic reality was becoming increasingly evident. The U.S. was at a crossroads, forced to confront the consequences of its policies and the changing global dynamics. As the rivalry between China and the United States continued to evolve, it became clear that the global economic landscape was undergoing a transformation. The traditional narrative of America's dominance was being challenged by the rising China, which sought to assert its influence on the world stage. This ongoing financial rivalry was not only changing the economies of these two countries, it was altering the very structure of global trade and investment. On a large scale, the question remained, was this a permanent shift in global economic power or just a temporary phase? The consequences of this rivalry were far-reaching, affecting not only the economies of China and the United States, but also the broader global community. Countries around the world were closely monitoring the situation, reassessing their strategies and alliances in response to changing conditions. The year 2024 became a significant turning point that will resonate for many years. While investors assessed the risks and opportunities presented by this new economic environment, the narrative of global power was being rewritten. The world was no longer simply divided into traditional spheres of influence. It was becoming a complex tapestry of interdependence, competition, and innovation. The consequences of these changes were profound. Emerging markets began to rise, seeking to carve out their niches in a world dominated by economic rivalry between China and the United States. Nations that once heavily relied on American investments and technology were now exploring partnerships with China, recognizing the potential of the new economic giant. The dynamics of global trade were shifting, and supply chains were being restructured to align with this new reality. In the end, the story of 2024 was not just about numbers and indices. It was about the people, businesses, and nations navigating this complex landscape. It was a narrative of resilience, innovation, and adaptation in the face of unprecedented change. As the world watched, the chess pieces continued to move, each decision carrying the weight of history and the promise of the future. The question of who wins in this economic competition was not just a matter of statistics. It was a reflection of the aspirations and ambitions of nations striving to define their place in a rapidly changing world.